You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
And as investors, we just have to remain patient, remain calm, have a bunch of cash and wait. I mean, trying to catch falling knives here or trying to be a contrarian is not a good idea. I mean, you're a contrarian when you're well informed. Right? I mean, we're not really well informed because we don't know what's coming. When you're a contrarian, you know what's coming, and you see everybody get off into one side of the boat, and you're standing over here going, "Wow, this is a great opportunity." There's, the world is functioning properly, everything is normal, and you see an opportunity. That's not the case right now.
Welcome back to Mining Stock Education. I am your host, Bill Powers. Thank you for tuning in. Joining me today is the Junior Miner Junkie, David Erfle. Website is juniorminerjunkie.com. I've been a subscriber to David's letter since its inception, and David offers excellent advice regarding navigating the junior mining sector. He provides macroeconomic commentary and explains how that impacts the junior mining sector and the precious metals, which is something we're observing right now as we see extreme volatility. The VIX closed. I'm speaking to David after the close on Monday here of the market, and the highest VIX close ever. It was up nearly 44% on the day. The Dow was down 13%, S&P down 12%. We saw gold go from $1,550 all the way down to $1,450, then back up to $1,500. Stocks like Sandstorm, I watched open and go down to $3.37 US. Then it closed the day around $4.67 last time I looked. Silver went from $14.50 down to under $12 at one point. Then it popped back up to $12.85 or thereabout as we're recording this. The gold miners, a lot of the producers were up. Most of the pre-revenue companies that don't have revenue that I looked at just as I flipped through my finance app, it looks like they were red on the day. But then some silver producers were up. Even as silver crashed and is under $13 an ounce, First Majestic Silver was up 10%. Fortuna Silver up 15%. Exelon is up 32%. JNUG was up 83% today. The GDXJ was up 20% even as the metals were crushed. This is extreme volatility. It can mess with your emotions if you let it. So, Dave, help us understand. I don't quite understand what's going on. To the best of your knowledge, what's going on here?
Well, a lot of uncertainty, Bill. The market is still extremely headline sensitive. So, with the U.S. being in lockdown now and pretty much the whole world being on lockdown, the economy has come to a complete standstill. So this is why, as you know, I put out an alert Sunday morning before the market even opened that I was afraid that there may be a stop run in the silver price because of the deflationary situation that this lockdown has caused. So that's exactly what happened today. I mean, once silver got below 1362, which was the 2016 low, there was quite a bit of stops there, and they got ran, and the silver price got all the way down to below $12. As you know, I've been slowly liquidating my silver positions because I was expecting this, but unfortunately, I didn't liquidate them all, so I felt the pain as well. So now you've got an extreme deflationary scenario. Then any junior that does not have any cash flow and just consumes cash, which is what these explorers and these developers do, they're really feeling the pain. I heard you mention the GDXJ was up quite a bit. Although the J stands for juniors, there are very few non-cash flowing juniors in the GDXJ. So the GDXJ is mostly mid-tiers and majors. So this is why the miners and mid-tiers and royalty companies are bouncing today, but non-cash flowing juniors are not.
So how is the GDXJ up 20% today, though? Because even as I just scroll through my finance app and look at some of the producers in there, there's some gold producers that I noticed aren't even up. But I mean, B2 Gold's up 8%, but some other gold producers were red on the day. So how is GDXJ up 20%?
Well, it's a very volatile index, and there's not enough. It can't really handle all the liquidity. So you get tapes that are painted that are not real. These are very limited ETFs, and this happens. When you really saw the extreme volatility was at the end of the day on Friday, when the GDX and GDXJ had extreme volatility, and JNUG I think was at one point down 92%. I mean, there's more liquidity in JNUG than there is in GDXJ. So you're getting this when you have extreme volatility like this, you see crazy action, and good luck trying to trade it. I mean, it's very difficult to trade this market. That's why I've been building up cash and just putting my hands in my pockets and waiting for the market to come back to some sense of normalcy. And with it sounds like the U.S. might go on lockdown for 8 weeks. So that's going to bring the economy to a complete standstill. I mean, the Fed's bazooka came out on Sunday, and they pretty much fired everything they had at the market, and gold, silver, the market, everything immediately reversed. So they have nothing left. So these are very dangerous markets. So having a large cash position and just standing aside with your hands in your pockets for now is a really good idea.
With JNUG, it was up, it's just a whopping 83.45% today. So when it's that high and GDX, more people bought it than it could actually handle, the underlying stocks. Someone communicated to me, I've talked to several people, that they say, okay, well, this is an indication of a bottom because, the miners always lead the precious metals out. Even though the precious metals crashed, the miners are telling us we're going to go higher. I'm not convinced of that, and this would be why, because there's so much volatility. Doesn't some of the general principles that you might otherwise employ, when it's this volatile, it's almost like they don't matter as much. Is that right?
Absolutely, yes. And we've never experienced anything like this in the modern world. I mean, this pandemic is global. I mean, the last thing we experienced something like this was probably the Black Plague, and that was centuries ago. So now the globe is all connected now. So the last time we had something like MERS or SARS or anything like that, the globe was not connected as well as it is now. So we're all connected. We're all experiencing it. We're all in total lockdown. It's affecting everybody. It's affecting everything. And as the economy was already on shaky ground, as far as negative interest rates are concerned in both Japan and Europe, it's a very dangerous situation, and I'm sure they're panicking over there at central banks in Europe. We obviously saw the Fed panic on Sunday night when you had an unprecedented 2 emergency meetings within 2 weeks and a total of a 1.5 basis point rate cut, which the market did not react well to. So these are very dangerous times. And I just want to reiterate that it's very dangerous to trade markets like this, and just be very careful out there. This is a professional market here. I mean, you have to be an extreme professional to trade these markets successfully.
Or you have to be an insider who knows what's going to occur before it occurs.
Right. Exactly. Yeah, that always helps. So where's the fun? Where's the fun in that if you know what's coming, right?
So you're the junior miner junkie, but you're going to be predominantly cash on the sidelines. And even when you see JNUG up 83%, or I mentioned a junior that was up 33% today, that doesn't lure you back in. You're sticking with your guns here for the time being.
I am. Yeah. It's there's way too many question marks out there, Bill. Way too many question marks out there. I mean, sure, this could be the bottom, but there's too much uncertainty for me to put more cash to work. I mean, my portfolio has been obliterated like most everybody else's. I mean, I feel fortunate to still have a little bit of profit on the year, and basically have my investment capital intact, which is I see that as a big win in this market right now. But like I said, I mean, it's been obliterated like most everybody else's. I mean, this when you had the GDX and the GDXJ about to break out of cup and handle formations, and the Silver Junior ETF SILJ was leading into the end of the year, all signs were pointing to the miners finally breaking out and catching up with the metal. Well, the government reaction to this coronavirus pandemic has taken us from the penthouse to the basement in 3 weeks.
Regarding the silver price, Dave, you're avoiding the silver juniors. We've had discussions, non-recorded discussions, and we've talked about silver going down to $8, under $10. But I called my local dealer that I've bought from in the past this morning, and he said we're absolutely not selling. We'll buy precious metals, but we're not selling any precious metals at these prices. So then he said you could call back in the afternoon. So I called back this afternoon and I said, where are the prices at? And he's like, after the premium, even though, silver prices where it's at, it's going to cost you at least $20 to $21 to buy a Silver Eagle. So you're talking about an $8 premium. And I said, what did it cost me 2 weeks ago? And he's like, my price out the door is the same today essentially as it was 2-3 weeks ago. And so, even when the spot prices beat down, and we know that how that happens through the future contracts, the price to the average investor that actually wants to buy the physical, it's the same amount. So my question is, how is that not an arbitrage that how could silver stay low for too long when somebody could demand a physical, delivery via the COMEX, and then they could just sell that, and then the dealers can sell it for over $20. It seems like a clear arbitrage.
I think it's because the silver has been trading as an industrial metal ever since 2016 and not a precious metal. And its industrial component is the reason why it's being sold down here in the futures market. I mean, and silver and the non-cash flowing, developer and explorer juniors are linked at the hip because of this. So when you have a deflationary scenario, you see it in the silver price. And when you have a deflationary scenario, juniors that just consume capital and do not throw off any are going to get hit. So that's exactly what's happening here. And the junior sector will not turn around until the silver sector turns around. And the silver sector will not turn around until this deflationary scenario turns around, until we get a reflation move. And we're not going to get that reflation move until people can get out there and spend this helicopter money that's coming into the marketplace here by all these central banks.
And that'll be the key that causes gold in assets to rise again?
Yes, absolutely. That is the key. We need the reflation trade to come back into the marketplace. And how is that going to happen when everybody is sitting inside their homes? Mm-hmm. I mean, it's crazy. I live in Los Angeles County in Southern California here, and we were out on the weekend and we were driving on the freeways and it was empty. It was bizarre. Being in LA with no traffic is very bizarre.
Dave, I talked to a CEO of a gold company, and he understands where the markets are at. I got his take on where the markets are at, and he was in good spirits though, because he still thinks that the second half of this year could be a good year for gold and for the gold stocks. I mean, would you hold that view that we could see a solid recovery? I'm talking specifically in the gold stocks, this year, maybe it's the second half of this year, sometime this summer?
Yes, I mean, we need to see peak virus. I mean, it's a flu virus, and the flu season ends at the end of April. So, we still have no idea, because this is, as you know, and your listeners know, that this is a rapidly spreading virus. So we have no way of knowing, and those question marks and uncertainties is what keeps me on the sideline with a lot of cash.
And just as we wrap it up, Dave, I appreciate your time here. I know it's been stressful and you've lost some sleep. So what would be your final advice? Maybe final advice about a sign you would look for. You talked about reflation. Anything else we could look for to discern that bottoming?
Yes. I mean, some sense of normalcy coming back into the marketplace. And I don't think that's going to happen until some of these question marks are removed. I mean, it's very interesting and dangerous times here. So we have to make sure that there's a bottom in place before we start jumping into these things again. Because, a lot of people are shell-shocked and have lost a lot of money. The last thing they want to do is try to catch a falling knife right here when there's so many question marks out there. And as investors, we just have to remain patient, remain calm, have a bunch of cash and wait. I mean, trying to catch falling knives here or trying to be a contrarian is not a good idea. I mean, you're a contrarian when you're well informed. Right? I mean, we're not really well informed because we don't know what's coming. When you're a contrarian, you know what's coming, and you see everybody get off into one side of the boat, and you're standing over here going, "Wow, this is a great opportunity." There's, the world is functioning properly, everything is normal, and you see an opportunity. That's not the case right now.
Well, Dave, I appreciate you taking the time. Thanks for giving me and my listeners an update.
Absolutely, Bill. Anytime.